So, guys, let me take a moment to, introduce. Although Sandeep is a popular name, and most of you are already aware of his work, which he shares over his Twitter handle. So, he's a technical expert and more into accumulation and distribution expertise, and he has taught over, if I'm not correct, around 800 or 1,000 plus students also. And his and his concepts are ultra clear. And last time also we had a spaces with Sandeep, and if you guys have not gone through that session, I would highly recommend you. That is available over my YouTube as well as Sandeep's YouTube. So at any point in time you can check out over our handles. So very welcome, warm welcome Sandeep once again.
Yeah. Thank you very much, Prince. And you yourself are doing a great job with these spaces. That is, you're calling all those people who are not that famous but still doing a pretty decent job. And that is what the retail connect with, right? I mean, if you see all these TV channel guys, those guys are already famous. They have this insider info, and for them it is kind of pretty easy to make money and stuff. But other retail investors who are doing it on their own, and if others, that is people who are just joining, if they kind of get some kind of advice from these people who have started as a retail and become, I mean, full time into this, it is a pretty good thing. And you have been doing this across the board, like different sectors, different themes, and all of that. So, congratulations to you too, Prince, for
Thank,
pulling off
thank
all
you
this
so much for
successfully.
your kind words, Sandeep. And I must tell you, like people have been generous to me, and trust me, like it's a mutual thing. The people, as you rightly spoke, the less known faces get a platform, and again, we get to learn from their rich experience. So market is all about, it's an ocean, so everybody has their side of niche, and we try to bring as many learned people as I can.
Yeah.
And yeah, rightly said. So Sandeep, so coming to the broader market, so how
Mhm.
you see from here, what technical charts are saying? I'm not talking specifically about the small cap, which we will be discussing in some time, but again, market as a whole, how you see from technical point of view from here.
Sure. So, if you look, am I audible, Prince?
Yeah, yeah.
Okay. Yeah. So if you look at Nifty, right, Nifty is kind of in a range, hardly 5 to 10% kind of a range, and it is moving in that range itself. So what happens in Nifty? We'll talk about Nifty and then we'll come to the broader market, that is small and mid cap. So Nifty is generally the money that comes into Nifty is either the FIS or DIS, right? So if the FIs are heavily short, or let's say if they continuously sell, usually the market goes down, and vice versa, right? But if you look at the broader market, that is the small and mid caps, in that 80 to 90% of the money prints is domestic money. You hardly see any foreign institutions money in those small and mid caps. Only the high quality ones will have them, but rest of them you'll see no FII holding in the shareholding pattern. So what one needs to focus on, if they have to invest in a small or a mid cap thing, is to look at the domestic liquidity and how the Indian economy is doing. Because Nifty returns, what happens, even in case other countries are not doing that great, but India is like doing better than the other countries, still FIS fund flow will come into India. But that is not the case in case of the small and the mid cap market, because there what happens, if the growth slows down, then generally you won't see incremental flows coming into the broader market. So as of now, the Nifty is in a range, hardly 5-10%. Even the small and mid caps are kind of moving sideways, but we are not sure because even the data recently is not showing at such great accumulation by the big guys in the broader market. So based on that, what I feel is, in case if we break that range, so if you look at the small cap index, around 9,200, 9,170 is the point from where it has been kind of moving up. It's already three times it has bounced from those levels. Now also it is quite close to that. So looking at the overall accumulation, maybe we can continue moving sideways, Prince. But looking at how the economy is shaping up, how the interest rates are moving, looks like it is going to be either a time-wise correction for quite some time, because price-wise it is already done, or maybe one more price-wise correction can happen if the things go really bad. But as of now, I mean, there is a support around hardly 2% for the, 2% lower for the small cap index.
So, Sandeep, if we have to see it historically, how had been, the market behavior when it, spent some good time in a range bound, which you just explained.
So in a range bound, what happens? The market tries to figure out whether the earnings, let's say after 6 months, are going to improve, Prince, right? Because you never know about the inflation data that is going to come in, what is going to be the RBI stance, and all of that. So if day before yesterday, the inflation numbers came in, which has again shot up above six. So that might force the RBI to again do a rate hike, which I think they pointed at in the last MPC meet. So if that comes through, the small and the mid caps are quite vulnerable to the rate hikes in India, Prince. It is even throughout the world also. So it is quite uncertain as of now. The market was trying to think that inflation globally has peaked. Even in India, it has peaked, and there won't be any further rate hikes after the repo rate meeting 6.5. But looking at the latest data, it is again pointing at a pretty, the inflation going above six, which might make the RBI again increase rates. So the market is trying to factor in that. In case if they go for a rate hike, what would be the earnings degrade and all of that that would be coming in, and based on that, the market would continue to move. Although as of now, it has not broken that. So until it is not broken, Prince, I would say we are still in a sideways market. Only once it breaks, we would know that whether we are going lower or are we going to stay sideways.
So, Sandeep, in such scenarios, like as far as investments are concerned, so is it wise to keep, more of cash, or there are always certain pockets within the market where you have to deep dive and find out the opportunities so as to make some good money, even in the sideways market.
Yeah. So since we are talking about small caps, right? So what we'll try to do is figure out how these small caps will give you very good returns. So even in a sideways market, there would be sectors which would be doing very well, right? So if you look at a few of the sectors that have been doing well are, so one is the consumption theme, as the even in the budget they kind of reduce the income tax, right? So because of which people will have more money in their hands, and that would eventually lead to higher consumption. So that is one. And even infra stocks, because of the capex push that was given in the budget, right? So these stocks, so if there is a bigger theme that is playing out, Prince, then it makes sense for us to go out there and buy the best small cap, that is fundamentally best small cap in that sector. So let's say there is X sector that is doing, not doing that great. Don't try to go out there and buy a small cap which is fundamentally great in that particular sector, because there is no tailwind for that sector to push it even higher. If there is a tailwind to push a sector higher, it makes sense to go out there and buy a small cap stock from that sector which is fundamentally good. That is how you make a better returns for an overall portfolio.
Right, Sandeep. So, what's your view on the other indexes, be it small cap, mid cap, or the bank Nifty kind of? So, are you also tracking those, or
Yeah, so IT index is one that I've been tracking, Prince. And if you look at it, it did make a bottom already and has rallied quite a bit. And individual stocks, if you look at them, then they have come up almost 20, 30, 40% also. right? A few of the small cap IT names that I track are something like Newgen, which has rallied from 330 to almost 450 thereabout. There is Scient, which has come up from 700 to almost 900 something. So small and mid cap stocks in the IT space have already started moving up. Although people are worried about recession, things like that, but because the IT sector had already factored in a recession and had corrected much before that, the sector is now thinking that after 6 months, maybe the earnings of these IT companies are going to be very strong. And before those numbers hit the market and every retail investor tries to buy them, the big guys get in and they are already buying it and pushing it higher. So IT is one, and also the other ones which are kind of looking very good is the FMCG, the consumer durable, the consumption theme that is doing very well, Prince. And also the electrification, like if you see most of these cable stocks, right? So the cable stocks have been moving up continuously, so that is one. And even a few other themes that look really good is the defense, aerospace, right? So those are the things, and even electronics, right? If because you see Apple also coming into India and all of that, electronics, those device makers should do very very well. Like something like a PG Electro Plus, that stock kind of hit 52-week high today. So that is clearly showing you strength in this sideways to weak market.
So, Sandeep, if I were to understand how the flow goes, like you talked about the strength in the small and mid cap IT. Will it flow to the large caps, or is it like the only related to earnings, like whichever company is doing, those will be doing good? How you, I mean, analyze as a whole sector if we were to ask?
So usually the whole sector, the main guys will get the money from these large mid caps, mutual funds and all of that. But in the small and mid cap market, it is usually the small cap fund or the PMS guys who kind of play in that. And in that, if you have to choose the best stocks, right, I would still go with the fundamental sprints and the stocks that are reporting very good set of numbers, right? Or else who have a history of maintaining solid margins in especially in IT and growth rate and have some kind of a niche. Those kind of guys should come back pretty strongly.
So Sandeep, like when we talk about infra, so what all allied sector we also need to see. Yeah.
So in infra, I'm not a big fan of playing the construction company directly, Prince, because usually they end up taking huge loans and then eventually, the debt burden goes really high and then stock starts to fall. Something like a Dilip Buildcon, which was a had great execution in the road building thing, but then eventually they have gone down because the debt became so big. So I'm not really a fan of that, but I would play the proxy plays. Maybe some guy who is making, let's say, tar, if you're going to go with tar roads or bitumen, that is, or if you are going to make concrete roads, play the cement guys. Even cement as a sector is looking pretty well. I mean, pretty good as of now. I mean, if I talk about the accumulation in the cement sector. So I would play it through this Prince instead of directly going out there and buying a construction company.
So Sandeep, not any stock specific, but again in the cement sector, do you see the strength is building on the chart? Is that conspicuous? Because these cyclicals are, one has to be very cautious that
Correct.
when the bottom forms,
Great.
that the potential right entry time, right?
True, true. So cement, I call it semi-cyclical, Prince. In the sense, if you consider steel and all of them, they are cyclical because they are traded globally and all of that. Cement has a limitation. You can't push a cement that is, take the cement more than 200 kilometer radius. So it has limitations, and the prices are not fixed. I mean, globally, you don't trade cement prices globally. So cement players will have that moat that okay, if they are in a particular region, then no other guy, if he has a factory there, then so literally there is no other competition. And because of this government push also, the capex push, right? Cement consumption should start to increase, friends. And even the real estate sector, right? That is, I mean, looking very strong as of now. Even in the last few years, if you look at it, the prices have gone up. I mean, all the real estate guys have done very well when the flat prices have gone up, because of which these guys also got pretty decent money and they are starting various new projects as well. So cement consumption should continue. It is not fully cyclical because there is going to be demand for that in some place or the other. And now with this government push and even the consumption theme kind of catching up, I think cement should do, uh, I mean, better than the other sectors.
Right. So I mean, Sandeep, any view on white goods if you are tracking the companies
Yeah.
within that
So
sector?
so even those are kind of doing very well, right? So if you look at something like a Blue Star, which hit a new high, right? Money is actually kind of moving into those segments as well, because eventually if people are going to save money, they are going to spend, right? So I mean, it looks like it is going to move into all of that, and the market is kind of trying to analyze what is going to happen in the next 1 year, 2 years, and kind of playing it. So the best thing I would say, Prince, is keep looking at the stocks that are hitting 52-week high. That is where you'd say keep money is flowing into these kind of stocks, and you would broadly get an idea as to okay, what is happening in the overall market. That's
Sandeep, like you talked about to look for companies which have strength and hitting 52 weeks highs.
it.
But again, like if you talk about normal investor community and maybe value investor guys, so
Mhm.
I'm not talking about all, but the majority is reluctant when the price appreciates, right? They have a conception that it has run up already, so they won't be able to make further money. So how you view it? And I've seen technical guys are more like they always believe in buying strength and selling weakness, and
True.
they keep aside their emotions aside.
True. So even I am of the believer that I would, even though being a fundamental guy, I would still want to buy the 52-week high ones and ignore the 52-week low ones, uh, Prince. Because many fundamental guys go in and try to do bottom fishing, but that is not a great thing because something is hitting 52-week high because the big guys are not really interested in buying it there, although eventually it will make one final 52-week high before bouncing back, Prince, right? But you, unless one has that special talent to figure out, okay, this is the last 52-week low that is going to be made, it does not make sense for a retail investor to go out there and buy 52-week low stocks. 52-week high, whenever it is hit, right, it is because the big guys are pushing it, Prince. And if the big guys are willing to put their money and push it higher, why not just tag along with them, right? Because they also know what the valuation is. And if there is someone who says that, okay, I don't want to buy expensive stocks, there are going to be stocks which are still cheap and are hitting 52-week high. It need not be that all the stocks are going to be expensive when they hit 52-week high. So you can again put that filter and kind of segregate stocks and play them, Prince.
Right, Sandeep. So, Sandeep, I mean, the chemical companies had a good run up in last, I mean, not last 1 year, but again, prior to that, after the corona, I mean, a drop, and then for 1.5 year, the companies did extremely well. And from then on, the growth which was there in the valuation has been coming down. So, do you see like the bottom for those companies is, I mean, near or that has already been formed, and going forward from here we can see some traction in those companies also. And in line with the China being opening up after what we say, after a long time, so would that have any impact on that?
Yeah, so China opening up wouldn't have such a big impact, Prince, because even before this whole COVID thing happened, right, the chemical stocks were moving up because China has its own issue of environmental pollution and things like that, right? So this is more of a structural theme that is playing out, that is the chemicals. And what happened, like you rightly said, every other retail investor was sitting on these chemical stocks because they had given you, I mean, extremely good returns in the last 2, 3 years. But now, I mean, this looks more like a deliberate attempt to shake out all these retail guys because the data tells me that this is, I mean, pretty good accumulation happening in them. Although it is, I mean, it might be very early to call it a bottom, but I mean, definitely money has started flowing into most of these chemical stocks as of now, Prince. Maybe the worst might is already over because if the big guys thought that even the next quarter results would be very bad, then they wouldn't have gone out there and started buying it, right? Because we are seeing big guys already entering them, looks like the Q3 results were the worst for these chemical guys, and it should improve from Q4 onwards.
Right, Sandeep. So we have one speaker. So Sai Vivek, you can unmute and ask a question. And for attendees, like the forum is now open for questions. So whosoever has any question to Sandeep, he or she can send in a request.
Uh, Hi, Prince. Hi, Sandeep, bro. A couple of. Am I audible?
Yeah, yeah, sorry, go
Go
on.
ahead.
Uh, Sandeep, bro, actually, we were discussing on this in the past also. So, again, maybe I am too optimistic and want to figure out one perfect way of picking stocks. So, please don't mind me. I basically have three doubts or improvisations that I am looking at. Please help me with that.
Yeah.
So, I mean, the delivery class that I had from you and the inputs, though I'm not using perfectly, it's one of the best input I got, the accumulation part. Having said that, uh, like chemicals and IT, two questions on them. So like chemicals, I don't know how to match this because the accumulation data might be looking good, but let's say they are breaking down their long term key moving averages of 150 days and 200 days. I mean, we were in specifically discussing Deepak fertilizers, and like though I didn't play the full journey, kind of a couple of months ago it broke down 200 moving average and it started falling. So matching up, like if you want to focus on 52-week high stocks, then probably the next leaders might not be chemical stocks and might not be something like Deepak fertilizer, which fell a lot. So even though it might be a fundamentally good company, so like how do we bring a I mean something there, like how to go about that part? That is one question. And
Mhm.
secondly, a question from the IT theme that is kind of growing right now. So like if I'm not wrong, you mentioned and are focusing on stocks like Nucleus, I'm not sure of the name, Nucleus Software, etc. uh, so I mean, probably accumulation data is very good in IT sector. uh, let's say if IT sector accumulation is good. So I also after your class started following. Before your class, I read about I started reading about the Can Slim and William O'Neill. So he
Mhm.
also says focus on 52-week high stocks. So if
Right.
accumulation in IT is good, uh,
Mhm.
and I'm seeing some, I still don't didn't figure out how to match Can Slim perfectly, but some aspects I was able to. So I identified stocks, a couple of stocks, but apart from that. stocks like Signity Tech and today Gen Technology. So these
Right.
stocks are already at 52-week highs or breaking out about 52-week highs. So like if somebody or if we are looking at superior performance and we know and we want to pick stocks, like is there a way where we can use delivery data very effectively uh, and add 52-week high or stocks in general, stocks that are showing relative strength? So like this is some conundrum I'm facing and I don't have an answer. I mean, I kind of approached you in the past, but yeah, these are my doubts and thoughts. Thank you.
Yes, right. So first we'll talk about chemical as a theme, right? So as Prince was mentioning, there was fraud that had built up and we corrected after that. And coming specifically to Deepak Fertilizer, right? So there even a lot of people, I mean, retail had jumped into that particular stock. But if you look at it, the fundamentals haven't really changed much, right? Maybe their last earnings wasn't that great compared to QOQ, but YOY it was still pretty good, right? So what is going to happen is when once we enter the phase that is the drawdown phase, stage four, right? What all of these stocks are going to have some correction. So we can't have stocks without correction high. So that is why what happens, like you mentioned, the best thing is you go out there and try to figure out if you want to make very good returns every year, every month, right? Then the only option that you have is go out there and buy stocks which are hitting new highs. No need to be a long-term investor. If you are a long-term investor, then you have to take these drawdowns also, right? There can't be a long-term investor who is continuously making money in all the markets because there are going to be correction wherein you take that hit and still be invested in them. If you don't want to take that hit, then do have these stop loss, maybe higher high, higher low. As long as the trend is not broken, you keep on holding on to it. Once the trend is broken, you exit them, look for stocks which are showing strength and play them. So that is about Deepak. So either you have 200 DMA or the 150 DMA or the higher high, higher low theme, right? If that is broken, then you just exit it and look at other stocks which are showing strength. And it won't be like other stocks that are showing strength are not fundamentally good or are too expensive. They also have, I mean, most of them would just be coming out with very good set of numbers. Maybe they had some capex that got over, or the product that they are selling, the prices of that is going up. So something or the other theme would be playing there. Try to connect the dots. If you are able to do it, then definitely you'll benefit. And since you're someone who said who wants to continuously beat the market, then the best thing is look at these names that are making it to the 52-week high list and try to connect the dots, look at what story is growing up and play them. And coming to IT, right? IT, if you look at the sector itself, right? First thing, maybe what you can do, all those sectors wherein the sector is also there in the indices, like you have Nifty IT index, although you don't have it for chemical. Look at what that is doing. If the index itself is making a higher high, higher low, and moving up, that means the stocks in that also is doing the same, correct? So then it makes sense for us to go up there and play it. Okay. And on the accumulation part, since it's a public forum, maybe we can have a call and speak on that side separately.
Uh, thank you, bro.
So,
Thank you, Sai. Kaushik, you can unmute and go with your question if you have any.
Yeah, thanks, Prince. I just wanted to ask on, matlab, any uh, certain kind of triggers that you get it while entering, because when I form a position, I would like to form it on a bigger size. So, is
mhm.
there any trigger points, or like whenever I'm exiting, I don't want to get that. If it is a bigger size, I don't want to get that a loss on exit also. So, is there any strategy or anything that I can follow?
So, Kaushik, what is happening is now the trend itself is down, right? So in a bear market, it is very difficult to make that kind of a gain. So it is very important for us to have stop loss. And you never know, in this bear market, there might be a sudden knee-jerk reaction due to volatility as well. So that will take your stop loss. So the best advice that I can give you is enter stocks once they have broken out and retested the breakout and not falling below that. If they are holding on to that retest, then that is the safest thing, and you'd hardly make a few percent loss in case that breakout level is broken, but there are higher chances for you to make money. So, I mean, again, playing on the same breakout theme or the 52-week high theme, you would want to enter those kind of stocks with hardly, let's say, 2 or 3% kind of a stop loss and play them.
Got it. Got it. Thanks for that.
Prince?
Hello, do I speak?
Yeah, go on,
Yeah,
Sandeep sir.
Yeah, Sandeep. Yeah,
yeah.
Sanjeev, go ahead.
Good evening, Sandeep sir.
Good evening, sir.
Uh, I would like to know. You see, in March of COVID, when it started, the stock in Nifty was around 8,000 or 12,000, whatever you look at it.
Right.
So, is there by any chance you
Mhm.
think that those kind of valuations are going to come back when everything is getting normal? Is there any chance of such kind of a correction in Nifty and the overall stocks?
It is going to be very tough in Nifty, sir. The main thing is what happened once the crash happened, the liquidity went up like crazy. Even RBI pushed in a lot of liquidity and even the global liquidity. Although the central banks are trying to pull it out, it is hardly very little that they have taken out. So as long as we are going to have that huge liquidity, the markets are not going to correct too much, sir. And also, what is happening, especially in India, is the mutual fund industry is continuously getting SIPs, sir. That hasn't gone down. So people have realized that long term खेलने से पैसा बनेगा. Let us be invested. Let us play the India long term story, and they are continuously putting more money. Unless and until that starts going down drastically, sir, I don't see a big correction happening in the markets. Even in the mid and small cap, what is happening is because the retail is continuously pushing more money in the market, we are not seeing such a big fall in most of them. So if you ask me, sir, 90% chance कि हम 12,000 वहां पे नहीं जाएंगे. Probably Nifty might be range bound, or if things go really bad again touch the 15,000, but उससे नीचे looks very difficult, sir. And even good quality stocks to touch the same 2020 levels, it is going to be difficult unless they are cyclical stocks and things like that. Those might go down and touch the same levels, but the rest of them I highly doubt, sir, because a lot of capex has gone in. Overall consumption, all of that looks very well, very good as of now. So it is highly doubtful, sir.
Okay. So you think this also has a correlation because last survey report that I read, it said that F2 and D2 participation, which was around 70% in the markets on daily basis, has come down to less than 38%, and the retail participation correspondingly has gone up. So that also is the same factor that you're talking about?
Right, sir. So that is because these guys are not pushing it too much. And since their participation is hardly anything, we are not seeing volumes coming in at all, right? So as long as they are not playing the market, I mean, their percentage is low, we might continue to be in a sideways kind of a market, sir, slowly maybe inching lower also. But kind of a rally looks out of question as of now until those guys start pumping in more money. Both of them, foreigners and domestic institutions.
So then we can safely assume that this sideways play will go on for a long time because those people, retail people, have played a long-term bet and they are holding on to at higher valuations, and they are not going to sell at lower valuations. So this market can really be into a big range bound. Do you think so?
Yeah, so looking at the current data, it feels like this time-wise correction can happen for a much longer period, sir. Although not many are really ready for it because already people are getting frustrated कि 6 महीने हो गए, 9 महीने हो गए, and the markets haven't done anything. If people start pulling out their funds, right, then we might see that dip coming in. And also looking at the market, sir, there is hardly, I mean, any trigger for the economy to start growing at 7, 8, 9%, right? So as of now, looks like we are going to be in a sideways range for maybe another 6 months. My best bet was by end of this year, we can start seeing a rally, but after this inflation number, even that looks a little difficult as of now.
Thank you so much, sir. Thank you.
Thank you, Sanjeev ji. So, Sandeep, how you go about dealing with the liquidity in the small caps? There are occasions like when companies hardly have any liquidity. So if the liquidity is not in place, so that will not come into your screener on charts, or there is some way to deal with it as well.
So that is difficult. Like you said, if there is no liquidity, no volumes, and I usually stay away from them, Prince. Even the big guys stay away from them. Why? I'll tell you. Because let's say they invested uh, 10 crores of money, or even let's say even 2 crores of it in a company which is hardly 200 crores. So they ended up buying 1% of that particular company. So when they want to exit, either they have to get another guy who's willing to buy it, or else for them to dump it, right? Because not many people will be tracking these 200, 300, 400 crores kind of a stock. So my advice would be if someone is trying to play these illiquid stocks, play them purely on fundamentals because technicals वहां पे कुछ काम आने वाला है नहीं because ऑपरेटर जो भी चाहेगा वही करेगा at the end of the day. If they want, they'll push it higher. If they want to dump it, you'll see continuous lower circuits also in those stocks.
Right, Sandeep.
Yeah.
So, Sandeep, you talked about defense sector. So, there are, companies where the valuation has gone crazy.
True.
So do you think like anytime soon this the traction or the tailwinds in the sector will subside, or it's a structural and trend which can last for years? How you read the defense sector as a whole?
Yeah. So in the defense sector, like you rightly said, there are hardly a few stocks, right? And most of them were very small companies. And because of this euphoria, they just went through the roof and at crazy valuation. I personally won't be a buyer in them. Maybe I look at things like special steel, right? So there is Kalyani Specialty Steel. There is even Vardhan Special Steel, which is hitting 52-week high. So things which are reasonably valued and are a proxy play to defense, Prince. So those would make more sense playing those kind of stocks instead of going out there and directly playing a beneficiary of this defense going up, right? Play something that is uh, ultimately selling their product to maybe aerospace or defense, all those stuff.
Right, Sandeep. And like for the information of the attendees, the creator of Vande Bharat, Sudhanshu Maniji, will be hosting him on 2nd March at 8 p.m. Like my next question, Sandeep, would be around the railway. So railway as a theme and its allied sectors.
Mhm.
So this is going to be, as far as I understand this space, this is going to be, the current government is very positive about expanding the capabilities in railway, and so how you see that sector, and the companies, the ancillaries companies, how they are building strength on the chart, if you have covered any, Sandeep, I cannot hear you. You there? Can anybody confirm whether they are able to listen to Sandeep?
No, no, we cannot able to hear Sandeep.
So Sandeep, if you can hear me, kindly check your network, or maybe you can drop and join again. And guys, in the meantime, please follow us and Sandeep so that the good knowledge can be passed on to more people. And this obviously provides us the necessary motivation so as to bring more learned people. Yeah, Sandeep, over to you.
Yeah. So talking about the railway theme, right? I think this is a theme that is going to play out over the years, Prince, and even I am quite bullish on it. So if you look at the electrification, like all the trains, most of them that are running, right, the Vande Bharat theme and all of that are running on the whole electric line. So even those, that is the reason you see a lot of these cable stocks are continuously hitting new highs, right? Even the small ones. So, like I said, if the bigger theme itself is extremely bullish, even the small ones, you take into account like a dynamic cable and all of that. Continuously, they hit 52-week highs and made new highs and are still holding on to those levels, right? So, if the theme, the bigger theme is extremely strong, then it makes sense for us to look at even a small cap company in that theme, which is still reasonably valued and fundamentals are good. That is how you kind of make very solid returns.
Right, Sandeep. So Bala, you can unmute and you can ask your question.
Yeah, Mr. Sandeep, good evening. So recently, even the index is not corrected much. The small cap stocks are corrected a lot from their highs. Like there are some fundamental reasons also, the margin contraction and everything. So I am in the market since last 2 3 years, but I had that in 2018, 2019 also. Small cap was corrected a lot and recovered after COVID only. So, what would be the time frame to see these companies to hit the all-time high or previous high? Is one our experience.
Yeah, so Bala, I mean, I'll first explain the difference between 2018, 19 and why this time we won't see such a bad correction. So in 2018, 19, that small and mid cap crash had too many factors, I mean, working against them. So first was the LTCG, which was introduced. Second was the rate hikes that was done by Urjit Patel, the then governor. Third was SEBI came out with this rule that a large cap fund cannot have a small cap stock in their holding. Maybe they reduced the percentage a little. So what happened? A lot of these mutual funds were made to sell all these small and mid cap stocks, right? So all those three factors played out, and also what happened, the growth went down drastically. That is the global growth and even the growth in India. So all these factors made the small cap index go through a lot of pain. But now, why the index isn't correcting too much as of now is there is only that is rate hikes that have happened which made the indices correct. And now, like you said, even there is margin contraction, which is again a result of the rate hikes that happen, right? Because most of these companies end up paying higher interest, and also because there is a demand reduction, their top line also goes down because they're paying more interest. The bottom line shrinks even further, because of which a lot of companies have corrected quite a lot. So, if you ask me, right, maybe 6 months into the next bull run or 9 months into the next bull run, probably these all-time high levels, if someone is kind of caught at those levels, those should come. But Bala, what is going to happen is we can't be sure. In case it is a Kachra company, chances are it is never going to touch those levels, right? Unless it is a small, I mean, fundamentally a good small cap company, then higher chances of it touching those levels pretty soon.
Yeah, that's a great. And one small follow up on that. So the The companies which are the market cap is reducing because of the margin contraction. So once the margin start build up, then maybe we can see this all-time high soon.
True. Yeah. So once margins start coming back, right, then you will see that, okay, margins have expanded, and even if the top line growth comes back to the same level, then definitely the stock is going to reach back to its same level. But it depends on whether you're playing a cyclical stock or it's a non-cyclical. If it's a non-cyclical, definitely it will cross its all-time high once the same results start coming back. Voila.
Oh, thanks a lot.
Yeah.
Thank you for your question, Bala. So before coming to Nitish, let me quickly ask Sandeep, like the banking, I mean the private banks and the PSU banks have already run up or maybe have shown considerably well strength in last 1 year. So do you think like going forward in line with the credit cycle, so is there more run up? I mean, due or it's like they will top out? I mean, anytime soon. What do you? How you see it?
Yeah, so with these interest rate hikes, right, the Prince, what is going to happen is it is going to, I mean, they are eventually trying to slow down the economy. So if that happens, and a few companies actually go and become bankrupt, right? Because the demand kind of goes down, they're unable to make profits, so they are unable to, I mean, pay back the interest itself. So that is going to have a pretty decent impact on the banking sector. So I would suggest better to stick with these big private banks rather than going and playing the small private banks or the PSU banks, because there you know how the lending and everything is, right? So it makes more sense to be with the big guys so that at least our money is safe and we'll make back, I mean, make decent enough returns on those bets.
Right.
But as of now, I mean, I mean, in case there is one more rate hike, the bank nifty rally may not happen. It may just be here or slowly inch down also, because after the news came in, right, the bank nifty has been struggling, especially the inflation numbers that came in. The bank nifty has been kind of struggling. But I would, if I have to put my money, right, I would still put it in these private top banks. That is the top four: Axis, Kotak, HDFC, and ICICI.
Right. And guys, by no means any names taken or any buy sell recommendation. So Ramu has a question like your views on music licensing stocks and ERD space stocks of the likes of KPIT and all. So obviously, stock specific, I doubt we can, but again, the
Maybe on
space.
the music theme, Prince, I mean, I mean, if you were invested in them much before the rally happened, then it would have made sense, right? Now the re-rating has already happened, right? Many people kind of get into them once the re-rating is done, and after that, it is more of a 15%, 20% kind of a compounding that happens. Before the re-rating, someone gets in, then they have a big thing of, I mean, opportunity to make big gains like 3x, 4x, 5x, and all of that. So maybe in that space, if someone finds something that is trading at a 10 times earnings or a 12 times or even a 15 or 20 times earnings, then it makes sense to play them. If they are already at 40, 50 kind of a P, then it is very difficult to get multi-baggers from a stock trading at 40, 50 P. Like
Right.
KPIT again, I mean, the market is clearly telling you that the market is liking what KPIT is doing and it is hitting new highs, right? So, yeah.
FJ Jan has asked like we had enough discussion on sectors and what is so two questions primarily like accumulation and distribution is a broad topic in itself. So, but if say some 5-10 minutes if you want to explain, that is at your discretion. And on the top of that, like any sectors to avoid or maybe which you think the strength is not in place, if not to avoid, maybe we need to be cautious about.
Well, then I would say just the PSU banking names as of now, Prince. Uh, but other than that, as India itself grows, right, every other sector is going to do well, especially now that we are into getting into that phase of India wherein we are going to grow at an crazy level. Maybe in the next 10, 15 years, every other sector is going to do very well, according to me. So, uh, only thing is look at the sector, how the sector is performing, and then try to buy stocks in that. If the sector itself is kind of going down, no point being brave and buying a small cap company in that particular sector, because it is going to be extremely tough for that stock to go against the sector and go against the market, right?
Right, Sandeep. And for SJ Jain, like we had a discussion on accumulation and distribution last time, so that the session was recorded, and you can check out it over my YouTube as well as Sandeep's YouTube. We both have uploaded that session over our YouTube. So the intent was like basically those who missed live session, they can revisit at any point in time to their convenience. And also, guys, like you must be enjoying this engrossing and insightful session. So please feel free to follow us. That gives us a motivation, right? So as to, I mean, work hard and share best of our knowledge in our capacity. So Sandeep, like you also teach people, right? So would appreciate if you take 2 minutes and explain, like if there would be any willing people, they can connect. But again, you can tell us about that.
Sure, sure, Prince. So basically, I teach them how to figure out where the smart money is moving, right? Because that is where eventually the stocks will also move and you end up making money. But people, if you just go out there and buy value stocks, especially in India, this is not going to make much sense, because if someone is a value buyer, right, probably will end up buying Coal India and all these PSU stocks, which haven't done anything for the last many years except for paying dividends. So value investing in India does not make much sense. In India, it is more of a growth investing. And these smart money guys, right? They figure it out much before a retail investor does. And we as retail investors usually try getting in once the news is out in the TV and all of that. That also doesn't make sense, because you might have yourself witnessed, after buying something after a very solid set of numbers, the stock still continues to move lower, right? Maybe 5 days after you bought it, you would see the stock is in red. So it does not make sense to buy once the news is out. It makes more sense to buy once the big guys are also buying, right? So that is what I basically teach, and I also teach people how to differentiate between a good stock and a bad stock. There is a screener thing which is free of cost, screener website, which is, I mean, if someone knows what to how to play around, right, it's a great tool which one can use to uh, figure out which are the stocks which have a very solid future. Yeah, and also one more thing, maybe we can have one session on cyclicals someday, Prince. And that is also main thing. People end up buying these cyclicals at 2, 3 P. You look at sale. There were 1,000 posts on sale when it was around 140, 150 levels, and it was trading at, I think, a single digit P, maybe 3, 2 or something. And because uh, retail apply the same concept of 2 PE stock is very good, buy it. What happened? Sale corrected 50% from the highs of 150 to 70, 75, right? And now the PE has also increased because the earnings dropped. So that also how one should understand how to play the cyclicals is also a big thing, because majority of the people in the markets end up losing a lot of money in these cyclicals itself.
Yeah, very, very rightly said, Sandeep. When the earnings peak at that point in time, the P looks depressed and people enter. And basically, it should be other way around. And like
Correct.
for the attendees, like we have a screener tool which is free version. Also, you can check out the chart and see how the company had behaved in the past, and seeing how, I mean, that gives a basic sense with at what point in time you are entering and exiting. So that also gives a good sense.
Yeah.
So Sandeep, anything which I missed out asking you, and for sure we have one session on cyclicals very soon.
Sure.
And anything you want, or maybe any one book if you were to name, which any I mean for technical specifically people can learn, or any thoughts, like are you thinking of writing any book down the line?
Maybe one I might write thing. I mean, talking about how the smart money plays in the Indian markets. Basically, for the Indian markets, eventually, Prince. I mean, what all technicals I use and the data kind of a thing, right? So on whatever I have learned, so on that, probably maybe somewhere down the line I might do it, Prince. But for others who kind of want to learn, right, then the best book I would say it is kind of momentum plus even the I mean, to playing the strength, that would be Stan Weinstein's Profiting in Bull and Bear Market. That would be the best book a retail investor can read to even kind of get an idea of, okay, when is the time to exit whenever it breaks the 150 DMA line, right? So probably they can go through that as well.
That's really great, Sandeep, and good advice to end with. So, guys, you can obviously, if you have any questions or queries, you can also directly write that question and tag us, so we can try to answer that in best in our capacity. But again, stock specific, we would be reluctant to take, because the idea is to educate, not to, I mean, push anything. As those who are regular attendees, they know what kind of session we do and what kind of intent we keep. So Sandeep, once again, thank you so much, and for agreeing to do this session. And again, it is always great listening to you, and I'm getting so many, I mean, good comments in the comments, and even in DM people are appreciating your spaces. Keep doing the great work and keep adding value to the community. And guys, like there are many resources which are available free, and the YouTube channel which Sandeep runs also has very good videos, and those are freely accessible. So you can also subscribe to that, and listen to what basically runs behind the smart money book. So idea is not to, I mean, it is very simple to name a stock and gather followers, right? But that doesn't last for long, right? Because stock name doesn't I mean cannot teach you how to fish, right? So idea is to educate you in good
Correct.
intent. Any closing remarks, Sandeep, before we end?
Sure. So even I enjoy these spaces, Prince. Probably we'll have a few more in the coming months. And I really like what you're doing for the retail investor community, trying to educate them on these different sectors, different topics. And I'm sure most of them are enjoying it. Uh, I'm sure that you are going to grow in size as well as in quality over the coming years,
Thank you.
Prince.
Thank
Look
you.
forward to our next
Thank you
session as
so
well.
much, Sandeep, and I too look forward to many more sessions down the line. And guys, like it hardly takes a moment so as to show your gratitude, and you are benefiting. It's your moral responsibility so as to spread the word, or at least write to us, so that we get to know. And there is always a scope to improve, and so you can share negative feedback as well. We are open to criticism as well, right? But again, please
Yeah.
connect more, and feel free. Keep aside your hesitation. No question is bad question until unless you are asking direct stock specific. You can always come up with questions, and trust me, the questions, it depends on the questions what kind of answer you derive from the guest. So thank you so much once again, and surely we'll be keeping in touch. And tomorrow we have one session with Kirtan Shah at 8 p.m. same time around, and that would be on mutual funds. So till then, bye bye, take care. Good night, Sandeep. And the
Yeah,
session
good
will be
night,
uploaded
Sandeep.
on our YouTube again. So Sandeep and I both will be
Yeah,
uploading, and that will be notified over our handles. So please do write to us. Thank you so much.
thank you. 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 Thank you.